This week I attended our Century 21 Heritage House Convention. One of the keynote speakers was an analyst from Edge Realty. One big takeaway for me from his presentation was that the marketplace is experiencing at this point a sentiment of negative confidence. Over the past few years, prices have come down, rates have come down, and yet there's been a delayed reaction in the marketplace, and it's because of consumer confidence. And in his opinion, it's going to start to see movement more in the way of transactions in 2026. I personally can already feel this happening, and it's being led, as he indicated, by the first-time home buyer. The five big themes that he talked about were, number one, the Bank of Canada cuts; number two, the housing demand, which he described as coiled and about to unlock in 2026; three, housing supply and demand; four, the condo market; and five, the rental market. I'm going to share some of the key points on each of his themes today with you, and it's interesting how they all relate to our housing market here today. So let's get started. By the way, I'm Barbara Scarlett. I'm a local real estate agent here in Niagara. I post videos about our marketplace, so be sure to subscribe if you want to learn more about what's happening here. So let's get started first with bank rates. There has been talk that there will be no more bank rate cuts throughout 2026, but in his opinion, he's not so sure about that. His reasoning behind his analysis based on the fact that he feels the labor markets are much softer than what the economists are predicting. The question is, which job reports are accurate when he's looking at them, and he made a few references to these in his presentation. Weak job markets partnered with a disappointing GDP at the end of 2025, he believes will lead to cuts this year. He doesn't think this downward rate trend will be in the variable sector, but it will be in the fixed rates heading into spring. Number two, and I love this segment because he talks about the pent-up demand that is building and that unit sales will be higher in 2026. He threw out there the percentage of between 10 and 20, and I love that because it sounds like we're going to have more transactions. He's not suggesting that there's going to be market appreciation, but that more will be transacting. His rationale behind this is that the fallen interest rates paired with the fallen prices of the monthly payments means that people can now buy in comparison to Q4 of 2021. The levels are the same. The last time that we saw these levels, home sales were 60% higher across Ontario than they are right now. And he doesn't dispute the fact that the housing prices are still challenging and affordability across Canada is challenging, but he's optimistic that with a trade agreement looming in the US due to the poor approval ratings of the government, and he predicts that the White House will start to be less aggressive with their tactics, and they're going to negotiate a trade deal by summer. That, partnered with some Canadian federal spending and stimulus over time, we will start to see some improvements. All of this is going to bring back consumer confidence to the marketplace, which is key to moving forward. It's the confidence piece that's being led throughout 2026, like we said, with that first-time home buyer, and we're already starting to see it now, quite honestly. Because of the imbalance in supply and demand, he does anticipate those prices to still fall downward feel downward pressure throughout the year, and we're going to see a rise in the power of sale listings, which is additional downward pressure on pricing. To sum up this section, the pent-up demand is building, and these low sales cannot sustain themselves indefinitely. Consumer confidence is the bigger issue right now, more so than affordability, and that sentiment is going to improve in the marketplace. Sales will start to be higher this year, between 10 and 20%, and it's going to be led by the first-time home buyer throughout 2026. Prices may grind lower yet, but the majority of the decline is already behind us, he says. Power of sale distressed listings will remain high this year, and this will also put that downward pressure on pricing, and it's going to continue into early 2027. Number 3, housing supply is going to be tight, and buyers should be positioning themselves. Why? Because inventory may be higher right now than it was in 2021. However, new listings are already starting to slow right now in the marketplace. On the side of new construction, we see an abundance of new construction sitting there, but construction activity has slowed down, and it's going to remain that way throughout 2026. Where the resale market is concerned, in the second half of the year, that's going to tighten up. There's going to be less inventory. Number 4, he also talked about the condo market here. And right now, there is an abundance of condos, but he sees a different crisis looming in 2030 in the condo market. His rationale behind this is that the condo starts are the lowest that they've been in 25 years this past fourth quarter. And because of that, completions in the year 2030 will be minus by several thousand units, which will have the inventory affected in the marketplace down the road. Some marketplaces will struggle in 2026 because of the number of condos that are sitting there and new construction that's currently available, and it's going to weaken prices further. In addition to that, the oversupply of condos and the new construction partnered with declining immigration, we will see deterioration of the rental trends. Currently, we have fewer investors already in the marketplace because we have fewer renters, as some of those renters can now afford to buy in the marketplace. This means a slowdown in the new supply, which is going to affect that market come 2030. So he's predicting an epic bull market on condos starting in 2030 because of the lack of production that's happening right now in the marketplace currently. And I'm ready for a bull market. I would love that. Number 5, his 5th theme, which I briefly mentioned above, is the weakening rental market and how it has affected the real estate market today. Rents have been falling across the marketplace. The reason for this, in part, is the Canadian population has been slowing dramatically due to the decline in the non-permanent resident cohort. That saw a surge back in 2021 to 2024 with population growth, and this fueled the market at that time. He did say that some smaller markets are still going to see that growth spilling out of the metropolitan areas. So in summary, there is a soft demand plus record new supply of inventory equating to a softening in the condo market throughout 2026. And we are expecting population growth to pick back up in 2027. So if you are a landlord, keep your tenants. Prepare for lower rents, no rental growth until 2027. And if you are an investor, interesting opportunities are coming. These weak rental markets are going to be positive for the first-time home buyer, and it's going to be those first-time home buyers that drive the future sales volume throughout this year. We are seeing it throughout this year and into next. Well, that's it. If you found this interesting and you want to learn more about what I just talked about, message me. I'd be happy to share more about what I learned at the conference. If you like this information, please hit that like button, subscribe to my channel so that I can produce more content for you on my channel.